All right. Good evening. Today we are looking at May 21st, price action 2025. Um, I have labeled here a ESM 2025 ends intraday trade review, and the subheader, I think is the proper term, is, or the focus and highlight of today's video is following a model and sticking to the plan. So that was kind of my takeaway from today's trade, and I'll get into why. But for the past maybe month or two, I've kind of been focusing and really just working and dialing in with the first presentation gap. It's nice for me. I really like it. Um, it's a constant variable, just like the new week opening gap or the new day opening gap or the opening range gap. It's um, it's a utilization of a constant variable and a PD array. Is kind of how I think about it. Even though that's technically how all like a new day opening gap is, it is a PD array, but it's a blending for me of something that I already would have been looking at in the market as a PD array mixed in with a constant variable. So constant variable is just something that I sort of like on my notes and everything is what I write for things that are known to occur every single time in the marketplace. Meaning that, for example, new week opening gap we know is always going to occur at Friday's close and Sunday's open. I think I said new week opening gap. And new day opening gap will always occur at the regular, sorry, not regular trading hours, the 5 p.m. close and then the 6 p.m. open, essentially. So that's Monday, Tuesday, Wednesday, Thursday. And then Friday, we have that Friday close, which is the new week opening gap close. Yes, okay. I was just double checking what I said there. Anyways, following a model and sticking to the plan. Today I took 2 trades in total and happy with the outcome. I am, but I'm going to sort of speed it up a little bit. These are the executions from the Trade of 8 user interface. You can see that the first order I did cancel. I was trying to utilize an inversion fair value gap, but the market was not providing an entry, and so I'll show you exactly why, the technical reason why I canceled it, and then I found a later entry that did sort of work, but not according to the plan per se. And then the second one, you can see I went in short after getting some feedback from the first long and I got about 6 handles or so. So next slide. Here is the S&P futures contract June weekly chart. So yesterday I did outline that watch this weekly consequent encroachment of the wick right here, extend that out, and then you can see that we swept that previous week high, and since then we have traded inside the previous week's range of the candle. I'm trying to figure out how to word it. So anyways, new week opening gap translated or drawn on a weekly chart, which would be this candle's close and that candle's open, near abouts. Here's a daily chart focusing on what's important for the view. So you can see we have the 1 minute or daily buy side 1:12 p.m. for May 19th, 2025. So that was the what was that? That was the Monday's candle high. Right? So we have Friday here, Monday's high and low. The high here and then the low here. And so then I did point out this order block over here. Now, I can't remember exactly what I said for this order block, but it wasn't in my focus until seeing the reaction like this. So now this is confirmed that this is an order block. If I'm being 110% honest, I didn't expect a reaction like this. But being sort of aware of these levels did help, definitely. So it wasn't like a shock to me as to why there was a constituted reversal here. Also, it formed the high of week currently on a Tuesday. Anyways, traded down into the daily fair value gap, buy side imbalance, sell side inefficiency. That's coupled with a volume imbalance. So that's May 13th, 2025. And now I'm going to shift this view a little bit. And this is what we were essentially looking at yesterday. So this is all we really had labeled on our chart. But going into now the latter portion of the week for Thursday and Friday, this is what I will be looking at now, which is that order blocks open. And you can have the mean threshold drawn out here. But just looking at the open right here, and then we do have a draw lower. So I can't say for certain do I think it's going to reach there or not, especially after a reaction like this. It is reasonable to at least expect it to trade up into this high, but that would be more of an intraday thing for me. So if I had to, like, gun to my head example, I would favor this candle's low. That's it. So I would not be, to put it into perspective, I wouldn't be buying stocks here for sort of whatever, long term or whatever people do. I would not be buying stocks here, even though we could be rallying tomorrow. This could be just a pseudo fall or whatever to clear the liquidity below these lows. But we do have this nice low over here. It could revisit this imbalance. And I'll speak on that shortly, but I do favor this imbalance. So if I really had to say for whatever purpose, this high right here, I'm sorry, not sure what just happened to my recording. I don't know if it caught that, but I don't know, everything just sort of blacked out on my screen. And if I'm being honest, the recording looks a little messed up now, but that's okay. I'll just follow along. Like I was saying, I do favor the high right here. And, well, this is quite a large gap in price. The 25% quadrant, or the upper quadrant of this, so round up, say 5,800. I do like that, but that would cap it for me. That would, and that's really, really, really far stretched for me also. So that 25%, that upper quadrant, so basically the halfway point between this high and this gap's consequent encroachment, cut that in half, you get about 5,800. That would be very nice to see for me, and I would be very content with that. So there would be, I wouldn't complain, I wouldn't try to do any more. I would just be happy, move on, or be happy, log it, and then move on to next week. So, but I do like that. I do think that there is potential to go down here into that candle's low. Now, with that being said, at any moment, I'm also not certain right now. So I wouldn't take any trades based off of that. There's times where the daily chart is very clear to me, and there's times where it's not, and it's kind of in a 50-50 right now. But if I had to lean to one side, it would be that short right here. So I don't really like what I just said, but it's just best case. It's the best I can provide right now, essentially. So next chart, a little bit more zoomed in. So assuming we do get down into this high right here. Why do I keep saying this high? This candle's low and this gap's high is basically what I'm saying. Every time I say that, that's what I mean. That would mean that this gap right here, from this candle's high to that candle's open, would have to act as inversion. So because it's a buy-side imbalance, it would have to act as a resistance. Reason being because we closed down below it. Now, the reason why I'm saying that I kind of am 50-50 right now is because I see potential to trade back up into this gap. So that's why I want to see it trade up into that gap. And based on the reaction over there, then I would be able to confirm whether it's likely to draw up into here. But my ideal scenario for this whole thing would be for it to trade in during Thursday and Friday up into that gap and then heavily reject it and trade down into just that low. And I wouldn't even ask for that upper quadrant. So I think that is possible. But yeah, this type of reaction, this was uncalled for in my opinion. So anyways, here is the 20-day dealing range, and the larger portion is the 60-day. So no 40-day here, just 20 and 60. You can see that this gap is still inside a premium relative to the 20-day dealing range. So it's not far-fetched. It's like very low-hanging fruit, but we had to wait for time of day, and we have to wait for, first of all, what would be first is unemployment claims, which kind of couples well with time of day. So tomorrow, 8:30 a.m. is really where I'm going to be lining up my focus with. But next slide, we have the hourly chart. You can see that that candle just slapped everyone in its face that was long below this low and below this low. Shorts, I'm sorry, below this low and this low, sell side got attacked. And really not much that just pops off right here for me. Usually I just like to look at the chart and then see what's obvious. It should jump right at me. And the only thing that really jumps out to me is this gap right here. So you can see how I do like how we traded in the lower quadrant of that gap throughout the entirety of, what was that, Tuesday's trading. And so you can see that it gave a signature that this is likely to happen. So just for my own journal, if I were to log that imbalance, that would be the highlight, that it did respect the halfway point of it. Anyways, we also do have this order block here. You can see that it's very clean. It's the largest up close candle from this price down here to this new week opening gap low. If you just take that entire thing and you start measuring each candle's, or each up close candle, this one is probably what is the elephant in the pool. And then you can see that the market does trade up there, fails to trade above that order block or that up close candle, respects the new week opening gap high, sends it lower, and right over here, 1, 2, 3, these three candles, or 1, 2, 3. If you compare to the NASDAQ, there's a stark difference. So NASDAQ went all the way back up to this portion of the market where the new day opening gap for Tuesday was. So you can see that relative to the ES, it was much weaker, NASDAQ. And so that could be used as SMT, or just sort of like a difference in character. All right, sell side below here, sell side below here. Market attacks both all in 1 hour. From here, we go up, and then we smack down lower, sell side, grabbed. All right. right, 15-minute chart. I'm going to start speeding through this. 15-minute chart. I do think that this run was also just completely uncalled for. It's obvious to me that they were trying to reach for buy side in some way, shape, or form. And that is much more apparent on the NASDAQ. But I think I didn't see it at first. But when ICT sort of made mention to it, there is some sort of manipulation. So it goes up, it stalls. Look at that, stalling right there. I'm just curious to see, I'm curious how traders react throughout this whole period. Yeah. All right, 5-minute chart. We have the 5-minute first presentation, fair value gap, buy side imbalance, sell side inefficiency at the 9:30 candle. So this right here is the weekly first presentation, and I'm just going to go through all the levels. New week opening gap high, daily order block, new week opening gap low. We have the first presentation gap right here for the week, and then we have the first presentation gap for the New York AM session, or the opening bell right here, and then sell side, sell side. So clean lows below here, engineered, right? 1, 2, 3, sort of forming a trend line liquidity. It's quickly attacked right there. Next slide. Sell side is swept here. All right. This was the 1-minute chart where I start to look at the market, start searching for some entries, and I was looking at, by the way, before I even continue, actually, the 5-minute first presentation fair value gap, the reason it's black, I wasn't really looking at it. So usually the white ones are for the first 30 minutes, like after the 30-minute mark. So like 2:30, for example, or 1:30 or 12:30 is where I draw the first presentation. And then at the top of the hour, so like 1 p.m., 2 p.m., 3 p.m., is where I have the first presentation kind of drawn out like that. So if it's like 1:01 p.m. first presentation, 1:02 p.m. first presentation, I just keep it black. So even though this one is 9:30, the reason I did it as black is because it's on the 5 minutes. So I just wanted to keep that sort of separate in my log. All right, where was I? 1:30. We have the first presentation gap right here. It's a large candle right after it touches the sell side. The sell side, right? So you can see that we come back up and then we traverse down lower, trading through it, to it, and through it, and then back up. And it's just kind of spending time there. So time distortion is kind of the play here. Not seek and destroy, but time distortion. So anyways, if I go to the next slide, right here is where I took my first long, where you can compare on the first or second slide that I showed you. You can compare that side by side. That was the first long. So really what happened here was the first order that I canceled was under the premise of that inversion fair value gap high right there. Wanted to see it come back down. Once I saw this candle right here and it traded down, didn't touch the consequent encroachment, traded higher. About when it was trading higher right here, I canceled the order. And when this was falling down, I wanted to trade off of this order block, which I did so. And then I wanted to target these highs right here, specifically this high. So 58.93 what I was targeting. And that was about 10.5 handles, so 10.5 handles. And the 5 handle mark, I'm going to zoom closer now, was right here. So you can see that yes, the 5 handles was booked, but because I was sort of preying upon the idea that market would trade higher off the premise of this gap right here, And so while this entry was a little bit early, once we closed above the gap, I wanted to take some longs and on this order block and then target these highs right here, asking for a little bit more than 5 handles. So wasn't really an ends model, but I was trying to play price action here. And so sometimes I vary between ends, and then sometimes I just vary between price action. But my main sort of objective is to seek low-hanging fruit. So I'm not, at first when I started trading and was introduced to the ends model, the first thing I kind of told myself is that if I ask for anything more than 5 handles, it's greed, it's out of my plan, it's not following the rules. But with a couple months and now a few years on my hand, it's easier to find 5 handles. So what I do now is I just search for low-hanging fruit, and you can see I didn't search for anything absurd or unreasonable. I just kind of looked for the first pool of liquidity to be targeted above these highs right here. So that's basically the first short-term high in the form of relative equal highs, and it did not go there. Instead, we trade up to the 5 handles. We trade lower, attack the stop right here that I had placed, which was 5 handles. So that's a constant that will never change in my trading, is a 5 handle stop. That is just my risk management in play, and it's benefited me a lot. Right? So taking a look here, this candle closes right at the low, and then the next candle closes beneath the gap. So based off of the candle closes, the first candle that closes above this gap, when I start looking at the market, is this one. So it closes above, trades off the order block, and we create this high here, come back down, and then the expectation was I wanted to see these highs attacked again. It did not do so. Instead, it closed below or at the low and then below the low right here. So now there's a sort of like I talked about in the other video. I think it was 15-minute focus logging exercise for NQ. That's the title name. That when the gap is there and when it starts closing above, you're bullish, and when it starts closing below, you're bearish. Anyways, we have this sell side imbalance, buy side inefficiency, or SIBI, that's formed in the lower quadrant. And next slide, right here. It's a little congested, but it's gonna clear up in a few seconds. So that's where I took my second short, or my second trade, and my first short. So I sort of received the feedback and took a short right here inside this gap, right at that opening price on the 1-minute chart. 5 handles above is my stop, and 5 handles below is the limit order. So clear up the chart a little bit, remove that old one, execution, remove that gap. We can see it right here, and you can see that the market right at the entry, and you can compare this with the order sheet that I gave you in the second slide. You can see that the market fills the limit within less than 3 minutes. So very fast feedback, and then it continues even lower, which I was not worried about. At that point, I had sort of gotten the message from the market that it was just a good point to stop for me. I didn't want to overdo it. I didn't want to rush. I didn't want to open myself up to more risk in the form monetarily speaking and psychologically speaking, because had I done anything else, it would have just resulted overall in chaos. Is kind of like how I think about it. I don't know if that makes sense. Um, I could go in there and, possibly take another loss. I could possibly go in there and take another win. But it's on the spectrum of emotion. It would have either spiked, higher. It would have either spiked my, whatever the word is, happy chemicals higher, which you don't want, or it would have spiked the stress chemicals higher, right? Not lower, higher. So I wanted to stay as close to baseline as possible. And the way I was thinking of it, whether I had won a trade after that, whether I had lost a trade after that, I would have deterred further away from my baseline. So I was happy with what I got. I took a 5-handle loss at the first trade, and then I got a 6-handle take back on the next trade. So it was like kind of like a trade with interest. Very little interest. But yeah, so that's why the presentation is sticking to a plan or following a model and sticking to the plan, because I felt like I utilized the plan, or like my kind of model, very well, of the closing candles, and how right over here, once we closed above, I was bullish, and then I saw this falling, I guess the best word is falling knife. So I wanted to see that come down into here, and then I wanted to see it back up into this order block. I didn't, even though I took a loss, I'm really not disappointed, because I was just following my plan. And then right here, I got a beautiful entry right over here, so silver bullet going into the 3 p.m. hour, and it absolutely provided an ample setup. I don't know. Yeah, it doesn't show. Anyways, I am going to go watch a movie or something. I'm going to go eat some food. And I will be watching tomorrow's price action. But just like a little checkpoint for myself, something I've seen on social media and I can definitely resonate with is that the market has been a little more tough. And I definitely agree with that, but it's not impossible. And so I think this is sort of like a good checkpoint for me, because there's a certain point where I would have, in my learning or in my growth, where I really would have just been digging my own grave. And right now I'm holding the waters pretty well. I think in the past 3 videos, I think it was 3 videos, I've been staying above water. So that's good enough for me. I'm happy with that. I'm trying to make the best out of what I have, and trying to, just make the best out of whatever the situation is, whether it's win, loss, break even. Just trying to adapt, and keep my cool, keep my calm, and stay collected. I think that's it. Yeah, that is it. I don't really have anything else to say. Once again, every time I come on here, I'm like a blank slate. I have nothing to say. Second I end this recording, it all comes to me after. So the main goal for me is just to stay consistent with, yes, my trading, but more importantly, my uploads. So if I take a loss, I'm still going to upload it. And not only do I want to stay consistent with my uploads to obviously grow the community, but I just want to get more comfortable with speaking on here, because I do feel like I have some good insight, and I'm sure everyone has good insight, but like, there's no doubt about that. Everyone has their unique and beautiful thoughts. It's just that right when I come on here, and I'm sure a lot of people also feel the same way, is right when they start recording or they hit the record button or whatever. I've tried different ways of recording. I've tried camera recording. I've tried like voice audio recording on the phone. I've tried a dictaphone, if you know what that is, like those little pencil kind of things. It's not a pencil, or like a pen with an audio recorder, just because I thought that, oh, if it's not electronic, or if it's not like a modern piece of technology, it'll make me feel more comfortable. But that did not end up working out. And so I just realized that it's not about the piece of equipment that I'm using. It's just about training the mind, the muscle, basically. So the mind and the muscle. It's a barrier, it's a mental barrier, and I'm aware of that. For example, if I come on here and start talking about, or if I start trying to freestyle, I'm going to slip up. It's not going to flow as well. So that's like a good way. I thought about it. I was like, okay, I just have to come on here and just start talking. Whether, it's important, whether it's not important, eventually, at some point in time, I'll sort of find my groove, and there will be, to me and to others, there will be more valuable insights that come out my mouth, is the best way to put it. Because, yeah, I'm going to cut it here.